Ayo or egg yolk? What's cracking with them viewers of the tube? We know what's cracking with the crypto markets. Altcoins were. They were gaining and gaining fast. So are you ready to make some gains of your own? Well, let's pump it up like a buff Vitalik because it's time for Chico Crypto. Now, what would get Vitalik to flex them muscles and make Ethereum stronger than it ever was? Well, it would be getting enterprises to stack Ether on their balance sheets and for enterprises to start using the Ethereum network like it was meant to be used as a transaction-based state machine. Now, regarding reserve assets and a place on balance sheets with corporations, Bitcoin has had that spotlight. MicroStrategy, Tesla, SpaceX, Square, and more have all announced they have Bitcoin on their balance sheets. But it's not only these big names. According to buybitcoinworldwide.com, 34 other public companies have BTC in their treasuries, as well as 2 countries, 6 private companies, and 14 ETFs or funds. So, Bitcoin has a hold on treasuries, and one of those public companies holding the asset is the biggest name in cryptocurrency, Coinbase. Now, as we can see, Coinbase has 4,482 Bitcoin on their sheet, which equates to over $218 million. Not a bad Bitcoin war chest, wouldn't you say? But how is this good for Ether? Well, last week, CEO of Coinbase, Brian Armstrong, tweeted, "We recently received board approval to purchase over 500 million of crypto on our balance sheet to add to our existing holdings, and we'll be investing 10% of all profit going forward in crypto. I expect this percentage to keep growing over time as the crypto economy matures." So where is that 500 million going? Into Bitcoin or somewhere else, like into Ether? Well, Coinbase put out a blog to explain. They said, "Towards that goal, we are announcing a change in our investment policy. We have committed to invest 500 million of our cash and cash equivalents into a diverse portfolio of crypto assets. Going forward, we'll also allocate 10% of quarterly net income into the same portfolio. This means we will become the first publicly traded company to hold Ethereum, proof-of-stake assets, DeFi tokens, and many other crypto assets supported for trading on our platform in addition to Bitcoin on our balance sheet." So, that initial 500 million is not going into Bitcoin. They already have that on their balance sheet. The 500 million is going into what they said: Ethereum number 1, proof-of-stake assets number 2, DeFi tokens number 3, and then other assets number 4. Then 10% will go into this mix after, including picking up more Bitcoin. That is what I can deduce and take from that blog. And since they listed Ethereum as number 1, I wouldn't doubt for a second at least half of that 500 million is going to be used to pick up Ether, at least $250 million, which puts it right on par with how much Bitcoin they have. Remember, BTC was just over 280 million. But in reality, Coinbase may just hold more Ether value than Bitcoin. According to crypto treasuries, Coinbase already has Ether on their balance sheet, over 31,000, which is worth over $104 million. And on that website, there are 11 other public companies that are holding Ether in their treasuries. And then remember, the number 3 asset Coinbase listed in the blog were DeFi tokens. As we know, DeFi is built majority on Ethereum, and almost all DeFi tokens are ERC20. This is absolutely bullish for Ethereum and the land of decentralized finance. The stage is set, and Ethereum is going to be gobbled up by enterprises. Coinbase will just be the big domino to set off the chain reaction. We just gotta wait for the specific buy amounts to become public, which they will be public as Coinbase is a public company. Holding the Ether asset on balance sheets is one thing, but how about some of these enterprises using Ethereum in the way it's supposed to be used, as a worldwide interoperable state machine? So, have you ever heard of ConsenSys? Well, you better have, because ConsenSys is the leading Ethereum blockchain technology company, which is led by Joe Lubin, one of the original founders of Ethereum. Now, as we can see from their website, they are used and trusted by leading organizations: Amazon Web Services, Microsoft, Ernst & Young, Procter & Gamble, Hitachi, and more, just to name a few. And the collaborations with all the enterprises they list go deeper than many people realize. So let's just begin with Microsoft and one that wasn't mentioned, JP Morgan. So Microsoft has had its own blockchain service platform called Azure Blockchain Services, and it was there to help enterprises create their own consortium chains and networks. And there were big names using it: General Electric, Singapore Airlines, Starbucks, Microsoft's Xbox, and JP Morgan. And as we can see from the JP Morgan slide, they say JP Morgan uses Azure to strengthen quorum and accelerate blockchain adoption in enterprise. Well, going to ConsenSys' product suite, guess who owns Quorum? ConsenSys does. Now, if you didn't know, JP Morgan has a big blockchain offering unit. It's not called Quorum, but it's called Onyx. And the biggest and most robust offering they have is Link, and that's formerly the Interbank Information Network. That's a banking network, and as we can see, it's used and deployed by over 25 of the world's top 50 banks, and over 400 leading financial institutions in 70 countries are using it. One of those is Goldman Sachs. As we can see from this Cointelegraph article subheading posted in June of this year, Goldman Sachs reportedly traded digitized treasury bonds for JPM coin on JP Morgan Chase's Onyx blockchain platform. So what does this have to do with Ethereum or ConsenSys' Quorum? Well, if you didn't know, JP Morgan created Quorum, and in August of last year, ConsenSys acquired it from them. Now, some of you might be like, well, JP Morgan has Onyx now. They just offloaded Quorum to ConsenSys. Oh, really? In April of this year, ConsenSys' Quorum Twitter tweeted, "Great discussion of the ConsenSys announcement today during the Forbes Blockchain 50 session. Thanks to Umar Farouk, CEO of Onyx JP Morgan, for mentioning our work with JPM and JPM Coin." Do you get it? JP Morgan, JPM Coin, Onyx, and Link, their banking network, is in bed with ConsenSys. The acquisition of Quorum by ConsenSys is so much more, and the blog reveals it. It says, Umar Farouk, global head of blockchain, JP Morgan, said, "We're incredibly proud of the usage of Quorum over the past few years and are excited to have ConsenSys as a partner to take the vision forward." Partner, my friends. And then at the bottom it says, in addition to ConsenSys' acquisition of Quorum, JP Morgan made a strategic investment in ConsenSys to support its mission to help developers build next-generation networks and enable enterprises to launch more powerful financial infrastructure. Partner and strategic investment into ConsenSys. But it goes deeper on a multi-enterprise level, and let's just swing back to Microsoft. It was announced by Microsoft in May that they were closing their Azure blockchain services, and it would be closed by September of this year. Where do you think all the customers on that are moving to? ConsenSys and Quorum. They announced this was happening, and the subheading reads, ConsenSys is working with Microsoft to offer an Ethereum-based managed blockchain service to their Azure customers. Both companies are working together to offer a service based on ConsenSys Quorum, an open source protocol layer for developing with Ethereum. All of Microsoft Azure's customers are coming to ConsenSys and Quorum. Although there is something more to this Ethereum Enterprise puzzle, and it leads us into the altcoin for today's video. So, Quorum's operation mode has been private blockchains and blockchain consortia, which means the trust of the networks is in a single operator or group of operators. This means trust and transparency is an issue between networks. Private blockchain A cannot trust private blockchain B, and private blockchain B cannot trust private blockchain C. They are siloed from each other. They still need a fully public blockchain, a decentralized trustless state machine to connect to, so they can trust each other. And that is Ethereum. But the kicker here is Party A doesn't want Party B to see all its data, how much they paid a supplier for products, or how much of a discount they got. And this would happen as the Ethereum blockchain is fully transparent and anyone can see any transaction. There needs to be a middleware which keeps the data private. Well, isn't this just convenient? These private blockchains and networks, the silos, are about to get a middleware layer built for privacy and trust. And that is the Baseline Protocol. It's the middleware which allows enterprises and their legacy ERP systems to connect back to the Ethereum mainnet, so they know they can trust transactions coming from their competitors or their suppliers and their systems or blockchains. So, quorum of ConsenSys, is it going to be getting based? Well, in February of this year, ConsenSys put out this blog. ConsenSys uses Baseline Protocol to future-proof business consortia. Yeah, you heard that right. It's to future-proof the business consortia. In the blog it says, the Baseline Protocol is a standard for keeping records and processes secured in synchronous fashion across companies that need to collaborate. Over the last few months, ConsenSys teams have been working to implement Infura, Quorum, and CodeFi in a way that is compliant with the protocol, ensuring compatibility with both private and public networks. The system will allow CodeFi assets and payments to reduce the friction, risk, and cost of financing assets such as invoices, purchase orders, and inventory records. This Baseline CodeFi suite promises to usher in a new generation of financial service business networks. That is big, and guess what? ETH Atlanta, the Enterprise Ethereum conference, which is put on by Provide, Baseline Protocol, and Base Ledger, just announced their speakers for day one. Kyle Thomas of Provide kicks it off. Then Martin and Stefan of Unibright are showcasing Base Ledger and Providebright. Then Andre of Coca Cola, John Wolper of Baseline and ConsenSys, Splunk is there, Nats is there, ServiceNow is there, York Rhodes of Microsoft is there, the BSN is there, and Joe Lubin of ConsenSys with Rachel Wolfson. And finally, it's ended with Mr. Brody of Ernst & Young and Kyle Thomas once again. So, do you get it? Unibright, and eventually some of that stinky link. Cheers, I'll see you next time.